Hailstorm, damn. Out here it's like 70 degrees, 75 degrees. All sunny, beautiful. You should really make the move here, brother. You're in Texas, right? I keep forgetting it. Nice. For me, sounds more tempting. I'm so done with California, bro. Alright, let's see. I was looking at the weekly chart and last week, damn, it's 1,000 handles. 1,000 points down. That's massive. I don't know what the last time we had that kind of candle was. This one right here. January 2022. Damn. But anyways, guys, I think we're gonna have a little bit of downtrend here, obviously. Just like this one here. Um, but the question is, how are we gonna trade this intraday, right? That's what matters the most. Right now we are trading into the weekly order block, which kind of failed already. I mean, I can't say it's failed, but like the open price got violated already. So I'm looking at the main threshold of this candle, which is probably gonna get violated as well. Um, Let me go on daily. It'll be better. Okay. So daily is more interesting because we finally broke out of the range, right? And now we should see kind of like downtrend, down order flow, right? And then depends on how it reacts to sell side, like major sell side, like this one, for example, or this one. We can say like it's gonna reverse, we're gonna go for all-time highs or not, but for now, it's too early to make that kind of anticipation. For me personally, my like the highest point of interest for me this week is the CE of this wick here, 16,600, and I'll tell you why in a second. So here we have the last manipulation. Okay, so let's take a look at its standard deviation projections. We have -2 right there. That -2 aligns with the wick CE here. And the reason I'm looking at the CE of that wick is because that is equilibrium of this whole leg as well. So here, I think it was this range. I'm not sure. Let me see. Yeah, here. Same level. That's the EQ of the range. So that is my highest probability draw liquidity or bias going into this week and next week. But probably because how we closed last week, I think we're going to see that level this week, honestly. So that level is um, like 16,650, 40, that level more or less. I'm expecting a wick down there and maybe like consolidate and rally. Overall, that's what I'm expecting. And at the same time, this kind of move will cause an S&T divergence here. That's why I'm interested in that CE of the wick instead of the sell side itself. So here, if I pull up ES, oh, hold on. I think ES should be weaker right now. Oh, let me see. Okay. Here, oh, actually, Nasdaq is weaker. Okay. So here, ultimately, what I'm saying is, I want to see SMT divergence at this low. Probably Nasdaq will sweep it, ES will fail, SMT diverges and rally. So I'm thinking like wick, body close above the EQ, do that couple times and rally. Okay, and that's my game plan overall. This is like I would say midterm um target or midterm draw on liquidity or midterm anticipation. Let's put it that way. This level is also the EQ of the range for ES. So bounce from the CE of that wick on ES would be appropriate for me, and then I'll have more confidence to go along. Until then, I'll be primarily looking for shorts, maybe like as 1 minute buy model scalps. You can look for long entries as well. I don't think I'll be doing that a lot though. So yeah, um, here, let me take a screenshot of this. But how are we gonna trade down there? Right now, on the daily level, we just have one. I would say I call these candles reset candles. This is essentially an order block, but with one quote unquote doji candle, right? And now that we expanded even further, like away from that, this level should be breakaway gap. Here should be breakaway. Um, Actually, let me annotate that. And now I want to see ideally two up close candles here on the daily, and the third candle should sell off. That being said, I'm looking for Wednesday high of the week. It's too early to tell, but I think that's the most likely narrative for this week. Wednesday high of the week. So Monday, maybe small range, but essentially closes as an up close candle. Tuesday, maybe slightly larger range, closes as an up close candle, and on Wednesday, I think it might wick above or not. I don't know. Sell off, probably low resistance liquidity run. That being said, I think we're going to be primarily looking for a potential fair value gap somewhere here to go short for low resistance runs, obviously. But I want to see those up close candles before engaging with liquidity here. It seems like we might have failed. Hold on. Go on the weekly. Yeah. Could be like the weekly mean threshold. Um, like it could wick down there and then create that order block I want to see on the daily level. But ultimately, this is the exact price action I want to see. Like something similar. I can't say exact, but this type of price action is what I want to see this week. Monday, Tuesday, Wednesday, Thursday, and Friday. Something like that. Something similar. Wednesday's BH. What's BH, bro? So here, actually, you know what? For the sake of the screenshot, I am going to forecast this real quick. Bars pattern forecast. Here. Oh no, not this tool. Which one is it? Ghost feed? No. Oh my god, sorry. Bars pattern, maybe. Yeah. I want to see something like this. Again, the key thing here is anticipating those up close candles because we're gonna have an up close candle and potentially two consecutive up close candles. Now the question is when that's gonna form, and that's the part I don't know. That's the part where we need to look at the intraday and the lower time frames. So any buy side formation on the like 5 minute, 15 minute, that'll be the confirmation for those daily up close candles. Here on ES. Actually, let's do this. So the idea about this SMT divergence is I was analyzing the old price action, like this rally here. Like every time we had a rally like this on the higher time frame, it's basically the same thing, same deal as if it's a down lower time frame. What happens is it expands and then forms a dealing range, and then dealing range low, dealing range equilibrium here gets tested. I think I've sent this in the channel before. Here, This is the last expansion leg. Retrace back into range EQ rally. So that range EQ retest always forms that SMT divergence. So here, Nasdaq made a higher low, a higher high rather, and yes, took that low here. You see that? So that's the idea behind all this um, pullback. Now the question is whether we're gonna be trending all the way down here. That's the part I don't know. I need to see how it reacts to the range equilibrium. If it starts stalling and if it forms that S&T divergence, then and only then I can say, okay, this is gonna be a buy, and we're gonna be going for the all-time highs. Okay, now as of now though, it's too early to tell. So, um, not in US. You're probably talking about Thursday. I still don't know what BH is. Hold on, let me see. Let's take a look at the Forex factory. So Monday, no news. Like I said, I'm expecting a small range, not because of no news, but because I think it wants to form that. Like it needs to reject first, right? And the rejections are usually the small ranges. And the following candle will trade into that fair value gap and hopefully close within or slightly outside, like ILVP on a daily fair value gap, but closes as down close, up close candle on Tuesday. 9:45 PMI. Wednesday, nothing. Thursday, we have GDP. GDP is a big event, you know. I'm expecting the largest move on Wednesday or Thursday, like large range. On Friday, we have PCE and consumer sentiment at 10 o'clock. These days might be good for Silver Bullet also. Thursday and Friday. We'll see. Overall, this is what I'm thinking right now. Executive. Okay. I'm writing this down for, like I said, for the screenshot because, well, if you guys are enjoying Sunday afternoon right now, I understand that. I also don't want to be here looking at the charts, but you know, it's what it is. All right, let's go on the down lower time frame. Let's go. Let's take a look at that 4 hour first. I really haven't looked at the 4 hour and the hourly chart after like Wednesday or something. So here we have the last engineered liquidity here. I don't think it's gonna get tagged. It's this high. This is the engineered buy side because the CE of the CE of the wick got rejected there. So you can consider that as the dealing range, like intermediate term or you know maybe short-term dealing range. Right now we have an order block there. I don't know if that's gonna get violated. The order block is not confirmed yet because the candle on Friday couldn't displace lower, right? There was a rejection there. Because of that, I think it could fail the fair value gap, rally. Maybe CE of this wick could get tested. And that CE is probably like more or less the CE of the fair value gap here. So I would say here. I would say look at the fair value gap from Thursday 6 o'clock on 4 hourly. I think that fair value gap is the one that should not get violated, not the one from Friday. So here the CE, there's also rejection block there. It could be either the CE of that fair value gap or CE of the tail of the wick, rejection and sell off. Let's see how that aligns with the daily. The upper portion looks cool, looks good. I like it. That'll also cause an SMT divergence here. We also have an SMT divergence at the low at the moment already here. Not confirmed, but it's probably going to confirm it in 3 hours. And then run on the buy side for yes. And Nasdaq probably will fail to do so. I think tomorrow, the primary thing we should do if we decide to trade is just trade within this range here, this one, and that's it. Be content with, I don't know, like 30 points or whatever, and close the charts and move away. I think that'll be the smartest thing to do, in my opinion. Let's go down to the hourly chart. It'll be cleaner here for the S&T divergence. So you have the range from these clean highs or engineered liquidity, I would say. This is the dealing range for the intermediate time frame here. And the level I like on ES is this fair value gap, because that is also the order block. And for NASDAQ, here, same level or similar level, I would say. Rally there and collapse. Well, again, because NASDAQ is weaker, I think if at any time market wants to form a turtle soup or like S&T divergence, which is essentially the same thing, I think ES will be the one that will run on liquidity instead of NASDAQ. So like on Friday, there was this trade I was mentioning. I think it was, I don't remember honestly. Oh. Okay, I remember. I don't remember. I mentioned this buy model on Friday. Oh, I forgot where it is. Fuck me. Oh, here. Hold on, it's not there. It was in the afternoon. Oh, I found it. Okay, here. There was this buy model, horizontal consolidation, smart money reversal, rally buy model. So primarily what we need to be looking at is these lower time frame buy models. Okay, these lower time frame buy models will be always suspicious, okay, because essentially that's going to be the pullback, and these buy models will cause an S&T divergence, and that's what we need to look for home runs at least. So if you want to get a great short, look for buy models on the lower time frame and failure. So here what happened was NASDAQ failed to take that horizontal consolidation, and that causes the sell-off, okay? And that'll be the lower resistance liquidity run, not the pullback, okay? So keep that in mind. This doesn't have to be on the 1 minute, obviously, but all right. I'm not gonna go down to 15 minute, honestly, because I think because we overextended already, 15 minute is irrelevant at the very moment. So here, that hourly fair value gap, engineered liquidity here, that is my primary target for Monday or Tuesday, either or. Depends on the overnight price action, obviously. So run on that buy side into the hourly fair value gap is what I'm looking for on ES. Same deal on NASDAQ. This is probably gonna fall slightly short comparing to ES. And that'll send the price lower. This, I think I need to take a screenshot of this so I can send it in the chat as well for the folks who cannot engage with this today. Here is the hourly buy fair value gap. I mean, obviously this is not going to be a one-sided delivery like this. This is just a visual, just so you guys know. There's NWOG here. I think NWOG CE or NWOG low will get tested and will be the low of the day, more or less, and then run on the buy side will send this price lower. And I want to see an S&T divergence at that high. So here, alert, let's add an alert there. And let's annotate this. Here also, ideally, Nasdaq will fail at the breaker while ES is running on the buy side. So here, reject there at CE at range equilibrium and sell off. Okay. And the fact that 15-minute and the hourly chart is kind of aligning together, I like that. I like that fact. Doesn't happen very often. When it happens, magic happens. All right, that's it for the indices. Do you guys have any questions? See you later, brother. Thanks for breaking it down. Take care, brother. All right, I'm gonna take a look at DXY and Forex real quick. The bro Noah. Hey, bro, how you doing? Do you trade Forex currencies or no? Because I know a lot of people from Turkey. Um, they tend to trade more Forex than futures. I mean, the XY is pretty straightforward, honestly. I think it's just gonna send it to the daily buy side. Here, and Euro. Euro is the same deal. It's just forming consolidation here to go lower. I think it's not going to violate this fair value gap here. And the ultimate target is the lows from October 4 in GU. Same deal. Formed an order block here. The order block should not fail. And it should send lower. Like that. I'm gonna take a screenshot of this real quick. Should not get violated. Hold on, why is it like this? Alright. I'll take a screenshot. Oh, I forgot to take a look at crude. Let's take a look at crude and gold real quick, and then I'm gonna wrap this up. And I'll probably see you guys tomorrow. Damn, gold's nasty, so it's range bound here. Don't touch gold. Do not touch gold. It's probably gonna start to pull back at some point. I don't know when though, that's the problem. Consolidate here, some time. Trade into range equilibrium and rally. That's the kind of price action I'm expecting from gold. Don't touch it. Yeah, crude oil looks interesting. I mean, gold and crude oil is very, very manipulative to assets, especially because we're talking about a conflict. It's highly volatile. I think here, the lower fair value gap, somewhere here, should be a great bounce. But yeah, thanks for coming by, guys. I'll talk to you tomorrow. Take care.